Welcome back. Growing export capacity and steady production growth are setting a positive outlook for oil and gas markets in the second half of this year. That's according to the latest forecast from Deloitte Canada. Let's get more insight from Andrew Botterill. He's partner of Energy Resources and Industrials at Deloitte Canada for his outlook on the second half of this year. Andrew, thanks a lot for joining us. Why don't we begin with the big event of the first half of this year, and that's the opening up of the Trans Mountain pipeline expansion, which finally began delivering oil from Alberta to the coast of BC and on, of course, to tanker ships destined largely for Asia. How material a factor will that be in the second half of this year?
Well, it is a great story from the first half of this year for sure, especially for Canadian producers that have access on that pipeline. Just the ability to start to move volumes into other markets and get them seaborne ourselves from Canadian coasts, I think is a big step for Canada as a whole, and to get into that global market. And I think we're seeing Canadian producers see strong Canadian prices on those crude volumes that they're doing that, and a little bit more competition for their volumes as they're getting into that more extended market.
Do you expect a further narrowing of the price between Western Canadian Select and WTI?
I think a lot of that narrowing is probably priced in right now, and we're benefiting from it, I think. So will we see a little bit more as we get into the winter? Maybe some, but I think it's a pretty strong pricing for Canadian producers right now. And to be honest, with the Canadian dollar where it is right now, it is a good benefit for Canadian producers.
What are we seeing in rig counts? Let's begin with Canada. What are we seeing in terms of rig counts, the number of rigs that are out there drilling and ultimately producing oil and gas? And what does that tell us about production for the rest of the year?
Well, I think what we're going to see for the rest of this year, I think, is a little bit of cautious optimism. I think we'll see the second half of the year look a lot by way of drilling similar to the first half of this year. But there is a little bit of trepidation, I think, when it comes to the pure natural gas plays. Natural gas is not priced exceptionally strong right now. So I think we're seeing a little bit of pullback in that. However, knowing that LNG is going to be going off the West Coast in 2025 here, has a lot of producers drilling those liquids-rich plays. And I think it's important to remember these rigs are developing, while they're developing a lot of natural gas in Canada in some of our plays, the economics are really based on a lot of the natural gas liquids that are coming there. And there are much stronger pricing on the natural gas liquids. So overall, I think we're seeing a pretty decent drilling season for the back half of the year, and demonstration of Canadian companies wanting to spend those budgets and get out there and at least continue to maintain flat production.
OPEC has a great deal of influence, of course, on both the U.S. and Canadian industries. The most recent news from OPEC is that it's willing now to dial back those production limits that have been in place for some time. What's the international backdrop looking like given OPEC's posture?
Well, I think it's a great observation, and I think it's people are recognizing there is a lot of backwardation into the future price on oil. So there is that expectation that things might soften as we get into the end of 2024 and into 2025. So I think that price is in a little bit of where people are expecting OPEC to be. I think OPEC would love to see prices in the 80s, but the recognition is that demand around the globe is softening a little, and as such, I think OPEC's wanting to make sure that they maintain some of their market share.
What investors would like to see is Canadian producers continue to emphasize share buybacks and dividend increases and not use excess cash flow to drill more holes and produce more oil. What are you seeing in that regard?
What I'm seeing is balance from companies. So I think they recognize that the financial success of the last few years has put a lot of pressure on them from investors to continue to put out dividends like that and continue to deliver the strong health. But they also recognize that they want to maintain the size and the breadth of their business. And so flat production is something that I think we're going to see from a lot of companies. That is still requires a lot of drilling and a lot of activity from them. So I think they're just looking at really balanced budgets to make sure that they're still keeping themselves at a size and scale that helps them manage costs and keep themselves cost competitive, but at the same point in time deliver on the financial expectations of the market.
What are we seeing in the U.S. in terms of its standing as a significant producer and exporter of crude oil?
Well, at first, you asked earlier about the rig releases out of the U.S. and what we are seeing is a little bit of softening in the rig count in the U.S. too. So, the softened natural gas market, a little bit less softening in the oil market, but still some, I think, is seeing a little bit of a slowdown in the U.S. and the recognition that they had a lot of volumes in storage. So I think we're seeing the right signals from U.S. producers as well, is that they're being, moderate in their expectations and trying to make sure that they manage the market and keep prices relatively robust.
LNG Canada in Kitimat, BC, I believe is expected to begin operations next year, 2025. We talked about Trans Mountain, which was years in the works. This one has been as well. And there has been news recently on another LNG project. I believe a final investment decision was made between involving a company and a group of a First Nations community that's going to be a significant owner of that project. Talk to us about the longer term, about Canadian natural gas and the LNG opportunity.
Well, I think, as people look to LNG Canada coming on stream here relatively soon, it is building a little bit of excitement. It wasn't long ago, 10 years ago when we had, 15 plus of these projects on the West Coast expected. LNG Canada's, at very close to bringing on. And I think what that's recognizing and bringing to the Canadian market is the realization that these projects are possible and they can be done. And I think that's put a little air back into some of these other projects. And you named Cedar by one that is at final investment decision. And I think there are others that are out there as well that are trying to advance these projects. So I think there's going to be a second wind, so to speak, in the LNG market, and the recognition that, Canada is long on natural gas volumes. So is the U.S. So we can only put so many volumes into the U.S. And it's really an opportunity to help, get developing nations off coal, get LNG onto ships off our West Coast and into the global market. So I think we're going to see a second wind of LNG, and the success of LNG Canada, I think, we're going to point to that as the big reason why we're now talking about these projects again.